Good morning, everybody. All right, wanted to add this video to our channel. There's a tax calculator that had been in the works for some time. I just kind of put it off while I was working on my graduate degree. And then over an extended winter break, I went ahead and completed it. I'm going to continue to tweak it. But this one in particular is for those individuals who need a quick online way to estimate their tax liability. So I also wanted to put some of the restrictions on this particular tax calculator. It is ad free. Of course, we don't, you know, try to monetize user access to some of these tools. So there's no ads, there's no cookies. The public is free to use this. It is only for U.S. federal taxes, right? So it won't calculate your state taxes depending on where you're at. You have to do that individually. Here in North Carolina, they have steadily gone down over the years. I think we're at like 3.99, I believe now. So that's good. That's a good trend, downwards trend on income taxes. But so right now I have the 2025 rates and brackets in, and of course this, some of the other restrictions, no above the line deductions. It doesn't calculate net investment income tax. If you are some of those taxpayers who have an AGI or adjusted gross income of over $250,000, married filing jointly, then you'd be subject to that net investment income tax. So you have to be careful there. Obviously, it does include the additional. There was an additional. I think it was an additional Social Security tax, or it might have been FICA. Pretty small, but it is almost 1% that's factored in there as well once you cross a certain threshold. So let's say, for instance, in this example, I'm going to go ahead. Let's see. We file jointly. Let's just say our income is, 224,000 a year, and let's say we paid 30,000, right? And again, this is, you can adjust this on your W-4 with your employer, but zero deductions. We don't, we just pay exactly no additional amounts. If we were to do this, say roughly $30,000, I could come in here, I'll calculate, and it says I slightly paid over. Actually, no, sorry, I paid under. So the liability would have been 32,508, and I owe 2,508. So that's pretty significant, right? For your tax plan. You don't want to potentially put yourself in a situation where you have to pay like underpayment penalties or anything of that nature. So, and this is where um, this optional previous year's federal taxes paid comes into play. So, this one I'm going to have to work on IRS law changes. Obviously they always publish updates to their manuals every year. And so I think, well, no, you can put in your previous taxes paid. You should be able to find this on your 1040 somewhere. Probably, I don't know which line item it is, but you can go in there and uh, and find what your previous tax liability was the year before. So let's say we paid, I don't know, uh, let's say 29,000, and I go ahead and I calculate. So it says here, current taxes paid divided by previous year's taxes. Current taxes paid, late penalty unlikely based on IRS guidelines. So because we paid, over 100%, let's see, current taxes paid, current taxes due. So those two thresholds, we paid enough to where we wouldn't have uh, like a late penalty or an underpayment penalty. But again, you have to check IRS guidelines. This stuff changes all the time. So I wanted to give this as an option. Now, of course, you may not file married. You might be a head of household. You might be a single individual. You might be, deciding to do it separately. But again, this is a nice tool to have. It helps my wife and I plan. kind of to see, what our tax liability will be and if we have to include any additional quarterly payments to avoid an underpayment or potentially late payment penalty to the IRS because ultimately you don't want to owe the IRS any money. That's not a good thing. So I hope this helps, guys, and I'm looking forward to any feedback in the comment section.